So in this video, we're going to go over exercise problem 4/8 and 4-9. So before we move on, I want to briefly introduce about temporary account and permanent account. So permanent account is basically all the financial statement items such as assets, liabilities, and equity. And temporary accounts are revenue, expenses, and dividend. So our purpose of preparing closing entries is to make balance zero for all the temporary accounts. So we want to have revenue balance zero, expense balance zero, dividend balance zero after closing entries. So how do we do that? We bring up this account called income summary account. This is also another temporary account, and we use this item account to make revenue, expense, and dividend equal zero. So there are four steps. First, we have to consider revenues, extend expenses, and then retained earnings, and then dividends. Okay. So for example, when service revenue, we're going with number one. For number one, revenue. When service revenue is recorded, usually we write cash or account receivable on the debit side, and we credit service revenue on the credit side. Now we want to make this equal zero. Service revenue equals zero to balance out and cancel out. So what do? What we do here is we want to have service revenue on the debit side, and we put income summary of the equal amount on the credit side. So what will happen is like this. Here you can see that the service revenue on the debit side is from what? The cash is from cash. Um, on the other hand, when this 10,000 on the debit side will go to the income summary, so it will be about zero in the end. So for in our question, the answer should be like this: service revenue 64,000 on the debit side, rent revenue 6,500 on the debit side, and we put all those two together and credit the equal amount of 70,500 on the credit side. So this should be your July 31st first closing entries. So after we are done with the revenue, we want to move on to expenses. So what do? We do exactly the opposite of what we just did, and we apply this to the expenses. So for example, um, we have depreciation expense, we have salaries and wages expense, and utilities expense, and all those together equal 74,300, and we write it like this. Okay, let me show you an example. We usually put expense on the debit side, right? Expense on the debit side, and we put cash or account payable on the credit side. But we want to cancel out expenses. How we do that? We put expense on the credit side, and we put income summary on the debit side, and we'll cancel out, and all the expenses account will equal zero after the closing entries. Okay, simple, right? Simple so far. Next one is a little tricky, and before we go on, we can see that there is a gap between revenue and expenses, and we call this net income here. There's a gap, right? The revenue amount, which was what, 70,500, and all the expenses together were 74,300, and there is a gap, and we call this what? Net income, right? Then what do we do with net income? We put it in the retained earnings statement. How do we do that? We first start with our beginning retained earning, then minus net income or plus net income. It minus if it's net loss, if it's net gain, plus, right? And then we plus or minus the dividends, and then we finally get our retained earning, ending retained earning. So in this case, we see that there is more expenses than the service revenue. So we know that there is net loss, right? So this is kind of tricky, this one, because if there is net loss and if there is net gain, the income summary credit and debit side should be different. So if there is net gain, we should increase our retained earning. So uh, if there is net gain, right, we should increase our retained earning, and we should debit income summary by the same amount. So if you see this, if we credit retained earning, we can see that the equity, the normal balance for retained earning is credit side. So if we credit retained earning, it will increase our retained earning. Okay, so um, yes, if there is net gain, we credit retained earning, and we put income summary on the debit side. And on the other hand, if there is net loss, we want to have retained earning on the debit side, so that the retained earning is reduced, and we want to have income summary on the credit side if there is net loss. This is very important. Many people don't really know like how this works. So if you know this, you're in the top 1% of those who knows accounting. All right. So if you have a hard time understanding this, then you should come to the session again. Yeah. And then let's move on to the dividend. When there is a dividend payment, we write it dividends on the debit side, and we put cash on the credit side. And we want to cancel the dividends so that we can record dividends in the next quarter. Um, right? So what we do here is that we give out cash, and we can cancel out the dividends by crediting dividends by the same amount, 10,000, and we should reduce the retained earnings. So if you see this from this example, you know that if you give out dividends, you're actually decreasing your retained earning. So giving out dividends a lot is not a good idea for investors, because it is keep reducing the retained earnings, which is for the investors. Well, it okay, never mind. And let's move on to the third one. So in our question, there was retained earning should be 3,800 on the debit side. This is the difference between what revenue and expenses, which was what net income. All right, and we have retained earnings on the debit side because it was what net loss. If it was net gain, the retained earnings should be credited and income summary should be debited. So yeah, okay, I think that's enough. For the dividends, we should have our retained earnings on the debit side always. So this is always when there is dividend. And we cancel out the dividends to make dividends account equal balance 0. So here the first one was the revenue, and the second one was the expenses, and third one was what? It was about retained earning, how net income went into the retained earnings. And the fourth one is how dividends were affected by how retained earnings were affected by the dividends. So after posting entries, if you see the income summary T account, it should balance and equal 0. So you see that here, let me have this on the green. Okay, we have income summary 70500 on the credit side. We also have 74300 on the debit side. We also have 3800 on the credit side. So if we add all those together, and on the debit side and the credit side, it should equal and balance 0. So you can write it like this. So revenue closing revenue was what, 70,500 on the credit side. Closing expenses were 74,300 on the debit side, and the net loss was 3,800 on the credit side. So when they all add up, on the credit and debit side, they should balance 0. And same thing with the retained earnings. If we collect all the retained earning items, then we can see that 20,260 is from the beginning retained earning. And now we know that this 3,800 was from net loss, and 12,000 was from the dividend out. So we have 4,460 for the retained earnings. And retained earnings and debit and the credit side should balance, and then your ending retained earnings should be 4,460. So let's move on to question C, post-closing trial balance. Post-closing trial balance, after closing entries, you will only have financial statement items and retained earnings. That is also financial statement items, right? So these are all financial statement items. There is no revenue or expense or dividends because revenue, dividend, and expenses are all accumulated in the retained earnings, right? So basically, after post-closing trial balance, you will have exactly same amount of cash from the beginning adjusted trial balance. You will have exactly the same account receivable from adjusted trial balance and so forth. And on the credit side, yes, equal. It should all equal. And retained earnings, this is the only difference. Yeah. Okay, these numbers are all equal trial balance. So let's write income statement for /9. So income statement is very simple, right? Service revenue, there was two, service revenue and rent revenue, and those two amount 70,500. And if we add all the expenses, that will give us 74,300, and it will give us net loss of 3,800. Then let's look at the retained earnings statement. So beginning retained earning 20,260, and net loss was 3,800, dividends 12,000, and it will give us ending retained earning of 4,460. So in this question, the most important idea is to know how to do the post-closing entries for service revenues. Here, let's move here. This is the most important ones. So we want to have temporary account equal 0 after post-closing entries. we don't want to deal with the permanent account. Um, so how do we do that? We bring up a new account called income summary, and there are 4 steps. Simply making we are putting all the income statement items such as revenues, expenses, and retained earnings. This should be is equal to net income, change in net income. So and the dividends, all these 4 items into income summary. So this is the most important idea, and this number 3 is kind of tricky because it changes when there is net loss and when there is net gain. Here you see this is important. When there is net gain, you should credit retained earning. When there is net loss, you should debit retained earning, right? When there is net gain, your retained earning should increase, so you credit retained earning. When there is net loss, you should debit retained earning because you're going to have to decrease the retained earning. So this is important. And dividend is quite simple, right? Retained earnings, the retained earnings 12,000 and dividends 12,000. The whole idea is to make dividends equal 0. All right. So yeah, and from this information, you should figure out that when there is a dividend payment, you're reducing retained earnings. And that is pretty much about it for this exercise problem. And I hope to see you in a TA session, and we will